I get over 10 messages a day from traders asking me if now is the right time to buy or sell a currency. And I am not exaggerating when I'm saying that 90% of the time they are asking whether it's time to pick a top or bottom. In this video, I'm going to talk about the 5 mistakes to avoid when picking tops or bottoms. Picking tops or bottoms is very tempting for new and seasoned traders because we are hardwired to think that we're smarter than everyone else. And there's nothing more satisfying than being right about catching a falling knife just at the perfect level. The risk to reward ratio when picking a top or bottom can also be very attractive and alluring. Yet the greatest challenge of picking tops or bottoms is that you're fighting against the prevailing market momentum, the sentiment, the trends, and that can be a very, very tough battle. If you want to increase your chance of success, you definitely want to steer clear of these 5 mistakes. Number 1, trading too large. I remember when I first started trading at JP Morgan in 1999, my lot size was $1 to $3 million. Sounds like a lot, right? You may wonder, why in the world would one of the biggest banks of Wall Street ever allow an extremely junior trader with zero experience to buy $1 million of dollar yen? The reason is because $1 million to JP Morgan is, a relatively small position. But more importantly, I was given zero leverage and a daily loss of $10,000 or 1%, with leverage that's being offered these days to retail traders at 50, 100, 200 to 1. And the stop that you generally need when you're picking tops or bottoms. Trading too large with leverage can be a big mistake because picking the top or bottom on the very first try is also very rare. Large positions make every point move against you more stressful. It can lead to bigger losses and limit your ability to adjust or exit your trade if it goes against you. Number 2, adding to losers. When you're picking a top or bottom, you're fighting the existing trends. And adding to losers, especially when it's not a part of your original trading plan, can be a huge mistake because, quite frankly, you could be wrong. If the trend continues, adding to losses would compound your risk exposure. And when it comes to trading turns, it is always much smarter to add to winners than losers. Number 3, stops too tight. You need to give yourself wiggle room. The best part of picking tops and bottoms is that they have attractive risk-reward ratio, but swing lows and highs are often tested. So putting your stop right at the swing low or high could, be a bad idea because you get stopped out just because dealers are, trying to hit those stops and adjust positions. Basically, see the stop get hit and then the trade reverse and move in your favor. The same is true of your trading round numbers. You may think 150 is a huge level in dollar yen, so that's where you should put your stop. Wrong, because there's a very good chance that dealers may take it 10 to 20 pips beyond that level before reversing the move. Number 4, don't be fooled by consolidation. Don't mistake consolidation for a potential top or bottom, because you need to make sure that there isn't a big event risk ahead that's causing that consolidation, like a central bank rate decision or a jobs report. And number 5, refusing to be wrong. Lastly, the biggest mistake that you can make when picking tops or bottoms is refuse to accept that you're wrong. One of the most famous cases of a trader not accepting a loss and trying to decrease his bet, dig himself out of the hole, was Nick Lien, who I actually interviewed last year for a trading battle. He lost so much money that he bankrupted Barings Bank and spent more than 4 years in jail as a punishment. It is very important to understand that the markets can stay overbought and oversold for far longer than you can remain solvent. And while eventually a top or bottom will be made, timing the entry and exit could be very difficult. Temporary reversals that appear as significant turning points but later prove to be false signals happen all the time. Trends usually exist for a fundamental reason, and it's far more effective to pick tops or bottoms in the direction of the trend than try to fade a strong move. If you found these tips valuable, please take 2 minutes to like this video, and don't forget to subscribe to my channel to get updates. If you want to trade with me, check the discount links in the description below. I'll see you next time.